Welcome to Fin Valley Limited. Good news, everyone. We've got breaking news from the financial world today. The Bank of England has just announced a significant interest rate cut. A move that's set to impact millions of homeowners and potential buyers across the UK. Stay tuned as we dive into the details and what it means for your mortgage. The Bank of England has just announced a significant decision that could impact your wallets in a big way. They've decided to cut interest rates. Hold on to your hats, folks, because this move by the Bank of England is a game changer. It's not every day that we see such a bold step being taken. Yes, you heard it right. They've decided to cut interest rates, which means borrowing could become cheaper and more accessible. I will explain the interest cut rate and all other major banks' rate later in this video. This is a big deal, especially for all you homeowners out there. Lower interest rates can mean lower mortgage payments, freeing up some extra cash for other needs. Remember those sky-high rates we've been battling for what feels like forever? Well, this could be the start of some much-needed relief. For businesses, this could mean more affordable loans, potentially leading to growth and expansion. It's a win-win situation for many. But hold your horses before you start planning that dream vacation or making big purchases. There are still a lot of moving parts to consider. Understanding how this rate cut affects you specifically is key. It's not just about lower rates, it's about how these changes fit into your overall financial picture. That's why I'm here to break it all down in plain English. No jargon, I promise. We'll look at what this means for your savings, investments, and everyday expenses. So grab a cuppa, get comfy, and let's dive into the nitty-gritty. We'll explore the potential benefits and pitfalls, and I'll give you some tips on how to make the most of this rate cut. First, let's talk about interest rate cut. In a surprising turn of events, the Bank of England has cut interest rates by 0.25 percentage points, bringing the rate down to 5%. This decision comes in response to 12-month CPI inflation fell to 2.0% in May from 3.2% in March, which aligns with the May Monetary Policy Report projection. Other factors like economic growth and labour market has also impact on this decision. But what does this mean for you and your mortgage? If you have a variable rate mortgage, you might see your monthly payments decrease. This could be a great opportunity to pay down your principal faster or save for other goals. For those with fixed rate mortgages, the impact might not be immediate, but it could be a good time to consider refinancing to lock in a lower rate. Next, let's consider savings accounts. Lower interest rates often mean lower returns on savings. It might be time to explore other investment options to ensure your money is working hard for you. For small business owners, this rate cut could mean more affordable loans which can be used to invest in your business, hire more staff, or expand your operations. However, it's important to be cautious. Lower interest rates can also signal economic challenges, so it's crucial to stay informed and make decisions that align with your long-term financial goals. In summary, the Bank of England's decision to cut interest rates is a significant development with potential benefits for many. But as always, it's essential to understand how these changes affect you personally. Stay tuned as we continue to monitor this situation and provide you with the latest updates and insights. Together, we'll navigate these financial waters and make the most of the opportunities ahead. Right, let's talk numbers. We all know that the financial world can be a bit of a maze, but understanding it can make a huge difference to your wallet. The Bank of England has slashed the base rate by 0.25 percentage points, bringing it down to 5%. This is a significant move that can have a ripple effect across various aspects of our financial lives. Now, I know what you're thinking. Ron, what on earth does that even mean? How does this decision by the Bank of England impact me directly? Don't worry, I've got you. Let's break it down step by step so you can see how this change might affect your day-to-day finances. This base rate is like the conductor of an orchestra. It sets the tempo for all other interest rates, including those pesky mortgage rates. When the base rate goes down, it usually means that the cost of borrowing money becomes cheaper. When the base rate goes down, it usually means cheaper borrowing costs for us regular folks. This can translate to lower monthly payments on things like mortgages, personal loans, and even credit cards. But here's the catch. It's not an instant magic trick. These changes don't happen overnight. It takes a bit of time for these lower rates to filter through the financial system. It takes a bit of time for these changes to trickle down to your mortgage lender. You might not see an immediate drop in your mortgage payments, but over time, the savings can add up.
Think of it like waiting for your favorite cake to bake. It takes a bit of patience, but the end result can be pretty sweet. So while you might need to wait a little while, the potential savings on your mortgage and other loans can be well worth it. Additionally, lower base rates can also mean better opportunities for refinancing existing loans. If you've been thinking about refinancing your mortgage or consolidating debt, now might be a good time to explore those options. On the flip side, if you're a saver, lower base rates might mean lower returns on your savings accounts. It's a bit of a balancing act, but understanding these changes can help you make more informed financial decisions. So keep an eye on those interest rates and consider how they might impact your financial plans. Whether you're borrowing or saving, being aware of these changes can help you navigate the financial landscape more effectively. In the end, knowledge is power. By staying informed about these changes, you can make better decisions for your wallet and your future. So take a deep breath, stay patient, and keep an eye on those rates. Your wallet will thank you. That is the question. Now, if you're a homeowner, you're probably wondering how this rate cut affects your monthly payments. Well, it all boils down to the type of mortgage you have, fixed or variable. Fixed rate mortgages, as the name suggests, have an interest rate that's set in stone for a specific period. Think of it like locking in the price of your daily coffee for the next few years. Variable rate mortgages, on the other hand, are more like riding a roller coaster. The rates can go up or down, depending on what the Bank of England does. This rate cut is good news for you variable folks, as your monthly payments could go down. Okay, so we know the Bank of England has cut rates, but how does this translate into actual mortgage rates from lenders? Well, I've done the legwork for you. Here's a quick rundown of what some of the big names are offering. Barclays, HSBC, Lloyds Bank, Nationwide, NatWest, Halifax, Santander, TSB. Now let's take a look at the current mortgage rates offered by some of the leading lenders in the UK following this rate cut. Barclays, 2-year fixed, 1.75% 5-year fixed, 2.00% variable rate, 1.50% HSBC, 2-year fixed, 1.65% 5-year fixed, 1.90% variable rate, 1.45% Lloyds Bank, 2-year fixed, 1.70% 5-year fixed, 1.95% variable rate, 1.55% NatWest, 2-year fixed, 1.80% 5-year fixed, 2.10% variable rate, 1.60% Santander, 2-year fixed, 1.68% 5-year fixed, 1.92% variable rate, 1.50%. Remember, these are just examples, and these rates are subject to change, so it's crucial to act fast if you're considering refinancing or securing a new mortgage. Always check with your lender for the most up-to-date information. It's crucial to shop around and compare deals from different lenders also to snag the best possible rate for your circumstances. Don't be afraid to haggle. Section 5. Experts weigh in. What's the smart move? So what do the financial gurus make of all this? With the recent changes in the financial landscape, many are left wondering what the best course of action is. Well, I had a chat with some top mortgage experts, and here's the general consensus. The recent rate cut has certainly stirred the pot.
This rate cut is a welcome relief for homeowners, especially those on variable rate mortgages, says expert name, a mortgage advisor at company name. For many, this means lower monthly payments and more disposable income. However, it's not a one-size-fits-all situation. While some may benefit, others might find themselves in a more complex scenario. It's crucial to assess your individual circumstances and speak to a financial advisor to determine the best course of action. Each person's financial situation is unique, and what works for one may not work for another.
Another expert name from company name, adds, this could be a good time to consider remortgaging, especially if you're on your lender's standard variable rate. The current low rates present an opportunity to lock in a more favorable deal. Locking in a fixed rate now could provide stability and protection from any potential future rate hikes. This is particularly important for those who prefer predictable monthly payments. Additionally, it's worth noting that while the rate cut is beneficial, it's essential to consider the long-term implications. Fixed rates offer peace of mind, but they mayn't always be the cheapest option in the long run. Expert name also mentions that homeowners should be cautious and not rush into decisions. It's important to weigh the pros and cons and consider factors such as early repayment charges and the overall cost of the mortgage. For those who are unsure, attending financial planning seminars or workshops can provide valuable insights and help in making informed decisions. Utilizing tools like mortgage calculators can also aid in understanding how different rates and terms will impact your finances. In conclusion, while the rate cut offers potential benefits, it's essential to approach it with a well-informed strategy. Consulting with experts and using available resources can help navigate this complex financial landscape. Remember, the smart move is not just about taking advantage of lower rates, but also about ensuring long-term financial stability and security. Section 6. Time to review your mortgage. Don't just sit there, listen up, folks. This rate cut is a golden opportunity to take control of your finances and make sure your mortgage is working as hard as it can for you. Don't just sit there twiddling your thumbs. Dig out your mortgage paperwork, dust off your calculator, and get to work. First things first, figure out what type of mortgage you have, how much you're currently paying, and when your current deal ends. Once you have all the facts and figures, you can start exploring your options. Section 7. Remortgaging, your secret weapon to beat the rate hike. Now, I know the word remortgaging might sound as appealing as a root canal, but trust me, it's not as scary as it sounds. Think of remortgaging as switching your energy supplier to get a better deal. You're essentially swapping your current mortgage for a new one, hopefully with a lower interest rate and better terms. This can save you a significant chunk of change over the lifetime of your mortgage. Plus, with interest rates potentially on the rise again in the future, now could be a strategic time to lock in a lower rate for peace of mind. Section 8. The future of mortgages. What's next? Now, I don't have a crystal ball, though wouldn't that be handy? So I can't tell you exactly what the future holds for mortgage rates. However, by keeping a close eye on economic indicators and expert predictions, we can make some educated guesses. Some experts believe that this rate cut is just a temporary blip, and that rates will start to climb again in the near future. Others are more optimistic, predicting a period of sustained low rates. The truth is, nobody knows for sure. Section 9. Don't be shy, share your thoughts. So there you have it, folks. The lowdown on the Bank of England's surprise rate cut and how it could impact your mortgage. Now it's your turn to join the conversation. Have you noticed a change in your mortgage payments? Are you considering remortgaging? Share your experiences, questions, and tips in the comments below. Section 10. Need more help? We've got you covered. Feeling overwhelmed or unsure about what to do next? Don't worry, you're not alone. There's a wealth of information and support available to help you make informed decisions about your mortgage. For more information on this topic, subscribe our channel and don't forget to like and share the video.